Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel @Accounting Buddy NB. In today's lesson, we will begin with recognizing the limitations of accounting. Next, we will explore the types of accounting information. Profit and loss account, balance sheet, and cash flow present a complete picture of business performance, financial position, and liquidity. We then identify the users of financial information, both internal and external. The core of this lesson focuses on the double entry system, the backbone of accounting. You will understand how every transaction has two aspects governed by clear principles, debit and credit rules, and recorded through journal entries, ensuring accuracy and reliability. Finally, we connect concepts to practice through application and financial statement preparation, supported by a set of questions and answers to strengthen your understanding and self confidence. So sit back, relax, and watch the full video till the end. Let us now learn limitations of accounting. First, historical nature. One of the limitations of accounting is that it does not consider current market value while preparing the financial statements. Second, subjectivity. Some estimates are made to ascertain the profit or loss of the business. Asset depreciation, bad debt provision, stock provision are few examples where the judgments are used to pass business financial transactions. Third, ignoring intangible assets. Assets which do not have physical existence but are vital for the existence of the business are not captured in accounting. Fourth, non-financial information. Non-financial data which is critical for business decision making has no place in accounting. Fifth, static in nature. Financial statements provide information at a point of time and changes occur after the reporting period are not captured. Sixth, window dressing of the accounts. Accounts are exposed to manipulation. Through accounting, business can hide true and fair financial position of the business. Seventh, limited scope. Qualitative factors such as employee morale or social responsibility or staff quality are ignored as accounting is confined to monetary matters only. Financial statements, that is balance sheet, profit and loss account, and cash flow generated through the accounting process are referred to as the financial information. Let us discuss them one by one. Balance sheet is also known as the statement of financial position. It is basically a snapshot of business financial position at a specific point of time. The components of the balance sheet are basically assets, liabilities, and equity. And the equation which we should always remember is assets are always equal to liabilities plus equity. Profit and loss account, which is also referred to as the income statement, is prepared with the purpose to ascertain the profit earned or the loss incurred during a reporting period. The components of profit and loss account are revenue and expenses. And the equation for profit and loss account is net profit is equal to revenue minus expenses. Now, cash flow statement provides the vital information about the cash inflows and outflows of the business during a specific period. The components of cash flow are inflows and outflows. It basically indicates the business entity's ability to generate cash and manage cash needs of the business. In our previous slides, we learned about users or stakeholders of accounting information. Users of accounting information could be internal or external. Internal users work for the business or they own the business. Let us now learn more about various internal users and how accounting information is useful to them. First is managers. As managers of the key functions of a business, they use financial reports to plan, control, and improve business operations. Second, employees. In order to ensure job security, stability, and future professional growth, employees of any business rely on financial reports. Next is management. Management uses financial information to evaluate overall performance of the business for making key business decisions. Next is departmental heads. Each of the functional head uses the financial information related to their department to monitor their department's budget or revenue or cost. Internal auditors. Internal auditors rely on accounting information to evaluate effectiveness of internal controls. In this slide, we have also learned two more important terms. One is budget and another is internal audit. Brief of both the terms is displayed on your screens, which are self-explanatory. Let us now learn about various external users of accounting information. Investors use accounting information to assess the profitability and viability of the business. They rely on financial statements to make decisions about buying, holding, or selling their investments in the company. While the lenders use financial information to evaluate the credit worthiness of the business, they review the financial statements to determine the likelihood that the company will be able to repay loans and meet its financial obligation. Suppliers use accounting data to assess the financial stability of the business. They want to ensure that the company can pay for the goods and the services provided and maintain a healthy supply chain relationship. Customers may review financial information to gauge the company's ability to continue operations and provide goods or services. This is especially relevant for long-term contracts or significant business relationships. Government and regulatory agencies use accounting information to ensure that the company complies with the laws, regulations, and the tax requirements. They may analyze the financial data for taxation, regulatory compliance, and economic analysis purposes. Analytics and financial advisors use detailed financial data to provide investment recommendations, financial planning, and strategic advice to their clients. They interpret accounting information to understand the company's financial health and future prospects. Public and media uses financial information to understand the company's impact on economy, community, and environment. Media reports on financial performance can influence public perception and market trends. Now let us understand the concept of double entry system. All the businesses follow double entry system of accounting. As the name indicates, each accounting transaction will always be entered into two accounts, one debit and one credit with the same monetary value. In order to ensure arithmetical accuracy and accounting controls, double entry system of accounting always ensures that the left hand side and the right hand side of the accounting equation is always equal. That is, assets are equal to liabilities plus equity. At this stage, just remember this equation. Let us further understand the meaning of the words assets, liabilities, and equity. First, assets. Assets are resources owned by the business that are expected to provide future benefits to the business. Now the liabilities, let us understand the term liability with an example. For instance, business has borrowed money from bank for business purpose. The amount of monetary money borrowed will remain the liability of the business till it is fully paid. Therefore, liability is the money which the business owes to the outsider as a result of past transactions. Now, equity means the money belonging to the owner. It is the money put in by the owner in the business. It is also referred to as the net value of the assets of the business after deducting liabilities. As a basic principle under double entry system of accounting, for each financial transaction, one account is debited and another account is credited. At this stage, just remember the table shown on your screen. Any business transaction, when analyzed, both the accounts will fall under any of the below five categories of accounts: assets, expenses, liabilities, revenue, and equity. Once the category of the account is identified, next step is to figure out whether the category so identified is increasing or decreasing, basis which the respective account shall get debited or credited. Remember, we explained this in slide number 9. Let us understand this further with an example. Mr. X, who runs a restaurant, bought two motorcycles for home delivery for $5,000 each, and the transaction is settled by cash. Now, if you analyze the above transaction, motorcycles, which are the assets of the business, will increase, and the cash balance, which again is an asset of the business, will reduce, and the following entry will get passed. The fixed asset account will be debited and the cash in hand will be credited. The assets are increasing, that is why we are debiting it. The cash in hand, which is again an asset, is getting reduced, that is why we are crediting it. Let us take another example to strengthen our understanding of double entry system of accounting. Mr. X runs a restaurant and paid $150 as electricity bill for June 24 by cash. If you analyze the above transaction, electricity being the expense of the company will increase and the cash balance being the asset of the business will get reduced. As a result of which, the following entry will be passed. Electricity expenses are increasing, so it is debited. Cash in hand, which is an asset, is reducing, that is why it is credited. Always remember, one account will be debited and another account will be credited. There is no exception to this rule. In double entry accounting system, arithmetical accuracy is always maintained as the same amount is debited and the same amount is credited in any business transaction. Double entry system is the basis on which the profit and loss account, balance sheet and the cash flow are prepared. Double entry accounting ensures error-free financial statements. Businesses are legally required to maintain accounts using double entry system. Under double entry system, accounts are categorized into assets, liabilities, equity, revenue, and expenses for easy understanding of financial analysis. Detailed and systematic record of transactions helps in preventing mismanagement and fraud in accounting. It facilitates the calculation of profit earned or the loss incurred for the business. Double entry system ensures the systematic recording of financial transactions. Each transaction is fully documented with a date, description, amount, providing the complete financial record. The journal entries are then posted to the journal ledger where they are grouped by accounts. Now is the time to assess ourselves. Please keep your copy and pencil ready for self-evaluation. Each correct answer will get you 1 mark. First question is, what is accounting? Accounting is the systematic process of identifying, recording, measuring, classifying, summarizing, interpreting, and communicating financial information. Its primary objective is to provide useful information to various stakeholders for decision making. Question number 2. What are the main objectives of accounting? Recording transactions, financial reporting, decision making, compliance, and financial control are the main objectives of accounting. What are the types of accounting? There are three types of accounting: financial accounting, management accounting, and cost accounting. Fourth question, true or false? Accounting is solely concerned with recording financial transactions. And it is false. While recording transactions is a part of accounting, it also involves summarizing, interpreting, and communicating financial information for decision making purpose. Now, fifth question is on your screens, true or false. The primary objective of accounting is to maximize profits for a business. The statement is false. The primary objective of accounting is to provide useful financial information to stakeholders for decision making, not specifically to maximize profits. Sixth question, what is the primary difference between bookkeeping and accounting? Bookkeeping focuses on recording financial transactions, while accounting involves interpreting and summarizing financial data for decision making. Seventh question, what is the primary objective of bookkeeping? Recording daily transactions. Question number 8, production loss due to machinery breakdown is not recorded in the books of accounts. Why? It is not recorded because it cannot be measured in money terms. Question number 9. What are the two main aspects of accounting? Bookkeeping and financial statements. Question number 10 is on your screen. True or false? Profit and loss account is prepared as on a date. This is a false statement. Profit and loss account is always prepared for a period, generally a period of 12 months, whereas balance sheet is prepared as on a date. Question number 11, true or false? Balance sheet is also known as position statement. This is a true statement. Balance sheet shows the position of assets, liabilities and equity of the business as on a date. Question number 12, again true or false? Financial statements are not comparable. This is a false statement. Financial statements for 2 or more years are definitely comparable. Question number 13, name any two functions of accounting. One, identifying financial transactions. Second, recording identified transaction in the books of accounts. Question number 14, list any two limitations of accounting. One, non-financial information is not recorded. Second, historical values are recorded, current values are ignored. Question number 15, which system of accounting is used? We all know double entry system. In my next lesson on 25th April 2026, we cover the core basic accounting terms in a simple and practical way. You will understand business transactions and their characteristics, cash versus credit transactions, and external versus internal transactions with clear examples. The lesson explains the term accounts and their types along with key accounting terms such as capital, drawings, asset and liabilities in a structured manner. We further break down the current and the non-current assets, fictitious assets and different type of liabilities with real life illustrations. This session ends with a quick question and answer round to test your understanding. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @accounting buddy NB. Thank you and goodbye for now.